Empowering farmers with intelligence. EFL AG-DATA presents to you.
Hello, everyone. Welcome back to another episode of the EFL AG-DATA Podcast, where we bring you the latest trends and updates in the feed and livestock industry. And today we are discussing on China's swine industry, specifically the recent increase in sow inventory. And joining us today is our resident market expert, Matthew Clark, who will unpack what these developments mean for the market. Hello, Matthew.
Hey, I'm glad to be here. This is a pivotal moment for China's industry. So, let's get into the data.
All right, let's get into it. Matthew, we've seen that China's sow inventory has been expanding for 4 months. In fact, from May through August, the numbers climbed up to 37.82 million heads. Maybe you could tell us what's driving this trend.
Well, the main driver is, of course, the good prices for pork in China. It's encouraging some production. So we've seen this rebound in the prices since about Q2 of 2024, and it's a good sign that the market is becoming more stable. Despite this positive trend, though, we have to keep in mind that the sow inventory in China is still down by about 10% compared to the same period last year. So there is still a gap between the sort of normal potential of the industry and what we have now. So interesting situation, interesting dynamics.
Yeah. So, Matthew, we could say it's a cautious recovery, but even when the prices are rising, we could still see that the smaller farms are holding back. Maybe you could share us why is that?
Oh, okay. Yes, this small farm phenomenon is quite common around the region. Actually, these farmers, the small farmers, have been through heavy financial losses. Remember, smaller farmers don't have a lot of capital behind them, so what they're doing is they're being cautious on putting their money back into the enterprise, and when they do, they put their money into piglets to fatten with a short cash turnaround compared to putting money into sows, waiting for the piglets and then going to market. So it's a less risky investment with a faster return to help their economic recovery. Now, the larger breeding groups, they are working differently. They've started making profits again. They are wary of expansion that might be too fast. Remember, if they expand too fast, too quickly, prices go down again and they lose out. So they're focusing on business strategies around debt reduction, improving efficiencies, and they're not rushing into the growth at this stage, especially because of the market volatility that they believe might still be there, which we've seen in recent years. Yeah.
Well, that makes sense. Now, how does this cautious approach affect the supply outlook for early 2025? Well, the time of Chinese New Year, you could tell us how does this affect?
Oh, okay. Yeah, it gets interesting because Chinese New Year is very close. Expanding sows now is not going to influence Chinese New Year. So it's going to impact the pig supply maybe 10 months down the road. So we might see a slight uptick in the pig numbers in January 25, but not up to the levels we saw in previous years. So we might have a slightly better supply, but we don't think it's going to be enough to increase to meet the surge in demand that happens around Chinese New Year, which is a peak time of pork consumption in China. So with that, though, there's some good news. We think it's going to maintain relatively good pricing well into 2025.
Yeah. So higher prices might be here to stay for a while, but I noticed that the number of pigs released for slaughter this year is still down by nearly 10% when you compare it to last year. So how does this play in the overall structure?
Well, I think it's the caution of the producers. They're bringing in technology. They're not expanding too fast. They're limited by cash. They're paying off debt. They're making their businesses is stronger. But I don't think we're going to see that sow inventory recover as fast as we'd like, as in terms of a consumer position, because the numbers are still below what we would consider normal. So we're still catching up really after a very challenging 2023. Financial production, output, market, all the rest of it. So we're going to see some relief, I think, or an easier market maybe in mid 2025. If the current trend continues. But for now, the market is fairly tight. Especially we're going to have a spike in demand, we think, in January, which is going to maintain some strength for the rest of 2025.
Yeah, right, Matthew. Well, maybe before we wrap up, could you share some, what's your advice for stakeholders in the swine industry leading into 2025?
Okay, as businesses, I think we need to be cautious. Sometimes when the pig prices go high, the producers rush into expanding their herds as quickly as they can. They're not doing it this year. Financial constraints are coming into it, and there is this feeling of caution. So, remain caution. Also, remain agile. Opportunities might come along. The small farmers are showing agility in that they're moving temporarily away from sow-based production to buying and trading piglets, fattening, etc. So we've seen caution, we've seen agility, we've seen the supply gradually growing, and we haven't seen huge impact yet on prices. Caution is a good thing in recovery cycles. So small farmers, big farmers, focus on efficiency. Look at areas maybe in the farming system that enhance biosecurity to maintain the integrity of your working capital in the herd itself. Look for ways of improving efficiency. Look for newer ways of feeding. Look for ways of feed cost production. And these are probably more important right now than expansion. Yeah, business strength is what we're looking for, not expansion of business size.
Yeah, excellent advice, Matthew. Well, it's clear that it's still a long road ahead, but I think we could say that the market is recovering. Well, thank you for your insights, Matthew. Great. Of course, always a pleasure to have you here with us.
That's great. Thanks, Alvin. Thank you.
And to our listeners, thank you for tuning in into the EFL AG-DATA Podcast. If you like that discussion, please do subscribe to our YouTube channel and follow us in our LinkedIn and Facebook page. Stay tuned, stay informed. Until next time.